Hi students, so today we would be starting off with the questions related to the topic AS2 Accounting Standard 2, which is on valuation of inventories. So in the previous lecture we covered the accounting standard as to what all other provisions or the regulations mentioned in the accounting standard 2 and how according to such accounting standard we have to value the inventories or the closing stock in the books of accounts. So let us now, with the help of these questions, understand the practical aspect of such accounting standard. So looking at the very first question, that is question number 1, which says, how do you deal with the following? And it says that on 31st March 2012, the closing stock of Gaurav Limited includes 10,000 units costing at rupees 10, and that is for rupees 1 lakh, but the current market price as on that date was at rupees 9, that is rupees 90,000. So now, as we all know, that the accounting standard 2 mentions that the inventories should be valued at cost or net realizable value, whichever is lower. So here in the question, so let us start solving the question first. So in solution to question number 1, so in the solution basically in the question it says that at cost the value of the good is, so let's just see, so at cost the value is units are costing at rupees 10 and it includes 10,000 units, so the cost would be 10,000 into rupees 10, which amounts to 1 lakh. However, the market value of such goods would be valued at rupees 9. So 10,000 units into rupees 9 would amount to 90,000. So now this is the cost, this market value. So since there is no other value or information given, so this market value will be considered as the net realizable value of such stock or such unit. So net realizable value. So now as we see that the cost price is 1 lakh and the net realizable value is 90,000. So whichever is lower, that means 90,000. So the goods will be valued, or the units will be valued at rupees 9, and thus such stock would be depicted in the books of accounts at the value of rupees 90,000. So this being the working of this particular question, and how you will have to write it in a fair manner is that you will be first you will show it in the working note, or you can choose to show it first and then write the proper answer to the particular question, or you can first state the facts and then show the workings and then write to the question. So the ideal way of writing the solution for a conceptual question would be, so you first write as in give an intro of the, so like in this case give an introduction to what accounting standard 2 talks about, the valuation of inventory, as to that as per accounting standard 2 the valuation of inventory in the books of accounts should be done at cost. So this, no need to, write it in a short form. Just strike it off rather than. So should be done at cost or net realizable value. And then in the second paragraph, you can put the facts of the case. as in the facts of the case. By stating facts of the case, we mean the by stating facts of the case, we mean that whatever is mentioned, or whatever are the particulars that are mentioned in the question. So in this particular question, it was mentioned that Gaurav Limited, the stock has been so the closing stock of Gaurav Limited includes 10,000 units. So here you will specify. So since Gaurav Limited's closing stock's cost is, as we have whatever we have shown here in the working. So if we just go here, so you can just simply state the show the facts, or you can whatever working that we have done above, you can put down the working in the facts of the case mentioning. So you can put down such working in the facts of the case and show it here that Gaurav Limited's closing stock costing at rupees 10 lakh, and then the value of market value, or the net realizable value, or you can simply say that the market price, or the value of market price of such closing stock is 90,000, and by showing the calculation that 10,000 into rupees 9. So since it is since the market value being the net realizable value, and then in the conclusion, so after showing this working, the third paragraph would be the conclusion, wherein you can show that since the market value of the net realizable value is less as compared to the cost of the closing stock, so therefore Gaurav Limited would be showing the closing stock at rupees 90,000 as per accounting standard 2. So here you can simply put that down here, the statement that I've just, so you can note it down, that since the value of the net, or since the net realizable value of the closing stock of Gaurav Limited is is rupees 90,000, which is less than the cost price of such closing stock, therefore as per accounting standard 2. So let me just mention only here. Yeah. So since the net realizable value of closing stock is rupees 90,000, which is less than the value of such units at cost amounting to rupees 1 lakh, therefore according to AS2 on valuation of inventories, such closing stock of Gaurav Limited should be shown at net realizable value of rupees 90,000 in the financial statement. Right, so this is how you will be writing down your answers whenever a conceptual question comes, or any question that has some facts in it, and on the basis of any particular provision of a particular chapter, on the basis of that you have to answer such facts of the case. So firstly, you will be giving the intro as to what is the topic that we are referring to, or what are the particular provisions that we are covering in this particular question. Then you will write down the facts of the case, and after quoting the facts of the case and relating them to the particular topic, then in the conclusion you will be writing your final answer related to that particular question, right? So moving on to, so hope this is clear. And since it was the it was the easier part, so therefore along with the answer I had kind of explained how you should be solving and answering your questions when you are sitting for your final exams or your final attempt of your, either it is CMA inter, or when you cross the CMA inter stage, either it is your final levels. So this is how this is the presentation part, which also matters a lot in order to score more in the exam. So now moving on to the next question. Question number 2 says, from the following information presented by P Limited, ascertain the value of stock to be included in the balance sheet. So we have the cost price that has been given to us of a certain stock which is amounting to rupees 60,000. However, such stock has become obsolete. So here the another provision or another use of such stock has been ascertained, where it has been said that it can be used, since such stock has become obsolete, it can be used for the production purposes after incurring rupees 10,000 for modification. Then the same could be used as a byproduct for an existing product, and the purchase price for the same amounts to rupees 40,000. So here in this question we have been given the cost, and also after mentioning and giving the cost of such stock, it has also been mentioned that this has become obsolete. So in order to utilize that particular stock, another option to how such stock can be utilized by the business or for the business has been worked out, and that has been said that this particular stock, which has now become obsolete for the business, has can be used for the production purposes. However, in order to use them for the production purposes, the company might have to spend certain cost, which is rupees 10,000 for the modification, and after that modification such stock can be used for the production purposes in the business. So, and further, this particular product after modification will be used as a byproduct for a particular existing product. The purchase price of the same will amount to rupees 40,000. So this is what is the use or the another option with which the, or after, on exercise of such option, the product can be, or the stock can be put to use. So let us ascertain the value of such stock, and how are, or what should be the value of such stock in the books of accounts. So solution to question number 2, right? And so as the question mentions, so firstly the cost of that particular stock, so cost of the stock we can say is rupees 60,000, right? So this is given in the question. Then the other option that we are exercising here, so in order to ascertain the net realizable value in that particular scenario, so this will be the cost. So after that particular asset or this particular stock has been put to use and used as a byproduct in another, so it will be used as a byproduct for an existing product. So how will we ascertain the cost of such stock? By analyzing the so by basically analyzing the net realizable value. So ascertainment of net realizable value of that particular stock. So this will amount to, as we can see here, that 40,000 is the cost, right? So this is the market value of that particular product, less the cost that has been incurred on them. So if you remember, how do we calculate the NRV, as we have covered in the conceptual part? So NRV is equal to, let me just cover it here. NRV is equal to the market value of the product, estimated market value of goods, or it can also be estimated selling price of such good minus cost incurred in order to complete that particular product, or in order to sell that particular, in order to complete or sell the product or make it saleable, basically. So here if we see that 40,000 is the cost of that particular product, and also in order to make and modify such products so that it can be used as a byproduct of an existing asset or existing product in the business. So for that 10,000 has been incurred, which will thus be, so in order to make it useful for the business, 10,000 has been incurred on that particular product to make it usable by the business, and therefore so we will be deducting, so this particular 10,000 belongs to the cost incurred in order to sell or in order to make that product usable by the business, and this 40,000 is the value which has been shown to us, or which has been mentioned in the question, that the purchase price for the same, as in the market value of this product, amounts to rupees 40,000. However, because we cannot use that product directly as a byproduct, we have to modify it, and to modify 10,000 cost has been incurred, which will be deducted. So for us, the net realizable value of such product will be rupees 30,000. And according to AS2, as we all know, that the value of the product, or value of such stock, or value of inventory, according to AS2, is cost or net realizable value, whichever is lower. So here, as we can see, that the cost of that particular product is 60,000, and the cost is 60,000, still the product is obsolete for the business. However, after making the modification, or we can use such product to as a byproduct, which will thus amount to the costing, and the value of such product, or the net realizable value, will amount to 30,000. So this particular value will be declared in the books of account for that product, which is the stock, basically, which will be amounted in the books of P Limited. So value of such stock in the books of P Limited will be shown as rupees 30,000, right? I hope this is clear, and as I've this is how we are solving it, but I have shown the correct way of presenting your answer. So you will be following the same procedure or the same format. However, we are simply solving, and the presentation here is to make you understand a particular question, and now that you have to also, you can choose to make the presentation as as you can think that you can depict it in the better way, but the correct form I have told you for presentation of a particular answer. Rest you can modify according to your own understanding. So moving to the next question, question number 3, which says that we have been given a particular situation that a company deals in purchase and sale of timber and has included notional interest charges calculated on the paid up share capital and free reserves in the value of stock of timber as at the balance sheet date as part of cost of holding such timber. So basically what in the valuation of closing stock, the question here says that in the value of the closing stock is a solution. Solution to question number 3. So here it has been asked as to advise in that particular situation where we have been shown and we have been told that while valuing the closing stock or the value of stock of timber includes the notional interest charges, and such notional interest charges are calculated on the paid up share capital as well as the free reserves of the particular balance sheet. So in that case, so as if you all remember, while doing and covering the accounting standard 2, in accounting standard 2, there were some costs which have been specifically excluded. So this is to explain, this is not how you will draft. You will simply say that according to the AS2, and then you will mention the costs which will be excluded from valuation of while you are valuing or determining the value of stock for the books of accounts, as there would be some costs which have been, so there was some cost. So let me just draft it in the same way, draft the answer as you will be putting it down in your as a solution in your books. Solution to question number 3. So as in the question, it is mentioned that notional and interest charges have been included while valuing the closing stock of a particular company. And as we all know, and we have studied in accounting standard 2, that certain costs have been excluded in while valuing the closing stock as per accounting standard 2. So therefore, notional interest charges, including the notional and interest charges which have been calculated on the paid up share capital. So first I will write down the reason, and then we will in a fair manner draft the answer for this particular solution. So as in the AS2, we have studied that certain costs are excluded. Certain costs are excluded while valuing closing stock or inventories as per AS2, right? And certain costs include, so one of the costs that is included in those costs which are excluded from the valuation of closing stock are the interest costs or the borrowing costs as per AS 16. So we have studied that. Then there were as per AS 16. So we have studied that the interest cost will not be included while valuing the closing stock or the inventories in the books of accounts. So therefore, the notional charges that have been included by the business in the valuation of closing stock. So this is not the correct depiction of the valuation or the value of the inventory that has been shown in the books of accounts. So therefore, such costs has to be excluded from such closing stock of the company in order to show the correct amount of the closing stock. Yeah, so the question says that the company, so what the requirement is this, how will you be dealing with the following situation? So in that case, what will happen is, so the answer would be, so the solution that we would mention here is that as per provisions, as per the provisions mentioned in accounting standard 2, which says that interest costs are not a part of valuation of inventory. So this is the conclusion that we are saying. So firstly, you will be mentioning the the specific provision that has been mentioned in the accounting standard. Then you will mention the facts of the case that such notional charges have been included while valuing the closing stock, and then you will come to the final conclusion. So this is the conclusion paragraph that I'm stating here, that as per the provision mentioned in the AS2, interest costs are not a part of valuation of closing stock of the business. Thus, such notional interest charges shall be excluded from or while valuing the closing stock of the company. So therefore, as per facts of the case, it can be said that valuation of closing stock of so what is the name of the business? So what we have not been given the company, right? So valuation of closing stock is not in conformity with accounting standard 2, valuation of inventories. Right? So this is how you will be writing the conclusion of this particular question. And moving on to the next question, which talks about, so the company deals in 3 products, A, B and C, which are neither similar nor interchangeable, and at the time of closing of its account for the year 2012 and 2013, so we have been given for these 3 products, we have been given the historical cost, which is in rupees in lakhs, and then the NRV, which is again in lakhs. It has been specified. So we have been given the historical cost and net realizable value of the items of closing stock. So what will be the value of closing stock? So so since it has been said that these 3 products are neither similar nor interchangeable, so how are we going to solve and evaluate or ascertain the closing stock of the company? So solution here, determination of closing stock. So since it has been given, so the items are here, items would be A, B and C. This is their historical cost, which is rupees in lakhs. This is their NRV, again rupees in lakhs. So the historical cost is 40, for B it is 32 and for C it is 16. Then for NRV we have the NRV being 28, then we have 32 and for C it is 24. So now valuation of closing stock as per AS2, valuation of closing stock according to AS2, which will be, so you can also, before drafting this particular table, you can specify, you can mention the provision above that as per accounting standard 2, the closing stock has to be valued in the books of account at cost or net realizable value whichever is lower. So according to AS2, in the following manner, we will be determining the closing stock of that particular business. So here, if you see, so valuation of closing stock, here you can choose to mention, so cost or so this is the historical cost, which is at rupees 40 lakhs, and this is 28 lakhs. So the lower will be 28. So thus product A would be shown at rupees 28 lakhs in the books of account. The closing stock value of product A or item A would be 28 lakhs. Here the cost and the NRV is same, so 32 will be the cost, either cost or NRV, whatever it is the value is same. So we will be depicting the item B at the value of rupees 32 lakhs. In the case of C, we have the historical cost at 16 lakh and the NRV at 24 lakhs. So the lower of either the cost or the NRV, since cost is less, so we would be showing the item C at cost. So it is not that because we have because the NRV here is 28, or we would be doing the total first of these items and then see that since it is 40 plus 32 plus 16, so it shows 88 here, and NRV is 28 plus 32 plus 24, which shows 84. So we will be we will be choosing out of the two or out of the total. No, since it has been mentioned in the question that all these three items are neither similar nor interchangeable, so would be determining the closing stock item by item and comparing the value of historical cost and the NRV of the particular item. Then we are ascertaining, so the valuation of the closing stock, which will be shown in the books of accounts, would be 28 plus 32 plus 16, that comes out to 76 lakhs. So the closing stock as per accounting standard 2 would be 76 lakhs. Right? Easy. So the only thing that you have to keep in mind is that you do not commit the mistake of totaling the historical cost first and then totaling the NRV, coming to the and ascertaining the combined total of the products, that this would be the closing stock and this will be the historical cost of the closing stock, and then this will be the NRV of the closing stock, and then out of the total of 88 lakhs and 84 lakhs you decide on the 84 lakhs. No, that is not the correct way, since it has been specifically mentioned in the question that such items were neither similar nor interchangeable. So we will be ascertaining the closing stock value by item basis and then doing the total of the closing stock, which will be shown in the books of accounts. So 76 lakhs is the correct amount of the closing stock for the business. So moving on to the next question. Question number 5. And question number 5 says that Z Company Limited purchased goods at the cost of rupees 40 lakhs in October 2012. Till March 13, 75% of the stocks were sold. So out of this 40 lakhs, 75% has been sold. 40 into 75%, that is 30 lakhs have been sold. So 10 lakh, the company wants to disclose 10 lakh as its the value of the closing stock, which has been which is left after selling of the 75% of the stock, that is 30 lakhs of the products or of the goods. Now the expected sales value, so now coming to the NRV part, that the expected sales value of this particular closing stock is rupees 11 lakhs. And out of those 11 lakhs, a commission at 10% on sale is also payable to the agent. So what is the correct closing stock which will be disclosed in the books of account as at 31st March 2013? So here cost is given, we have to ascertain the NRV. So for NRV also we have been given the sales value and also the cost that will be incurred in order to complete this particular sale of such stock. So we would be deducting this 10% as then because this commission is payable to the agent. So we will be deducting this particular amount from the sales value, which will then give us the value of the NRV. And if the value of such NRV is less than the cost, that is 10 lakhs, then the value of closing stock or the correct closing stock would be the NRV instead of showing that particular stock at rupees 10 lakhs. So let us just first ascertain the NRV and then decide as to what would be the correct closing stock of this of Z Company Limited as at 31st March 2013. So coming to the solution for question number, so this is a question number 5. So solution to question 5. So now we'll quickly solve the questions, the remaining questions, and complete the accounting standard 2 of our course. And since I've explained how you have to present your questions when you are solving it in a fair manner, so you have to stick to that pattern only. And right now, just to explain you, we'll just quickly solve the question as to what would be the correct answer or what would be the correct valuation of closing stock in the given circumstances. So here, as we have shown, that the cost that has been given to us of that particular product or the remaining closing stock is cost of those 25% of closing stock of goods . So 40 lakhs into 25%, right? And as it has also been given in the question that 10 lakh is the closing stock. So even if we try to ascertain, or even if you want to see that is it the same value that has been so at which the goods have been procured, and the remaining value of 25% of such 40 lakhs would be, so 40 into 25% will give us 10 lakhs only, and this has been given in the question also. So 10 lakhs is the cost of such closing stock, and it has been said for NRV, net realizable value, the market value or the estimated selling value has been given, less the commission that is to be paid, commission paid on sale to the agent, right? So this is the commission that has been given to us, that commission of 10% on sale is payable to agent. So commission paid to agent on sale would be deducted from such estimated selling value. So the selling value is 11 lakhs and the commission is 10% of 11 lakhs, which will amount to 11 lakh minus 1 lakh 10,000, which will give us 9 lakh 90,000 as the NRV. And since the NRV is less than the cost price, so the value of closing stock or the correct value of closing stock will be, correct value of closing stock is equal to 9,90,000. That will be shown in Z Limited as at 31st March 2013, right? So let us take a look at the next question, that is question number 6, and also you can mark this particular question as an important question. Question number 6 as an important question, and also I'd say that question number 4 is also an important question, although it is the easier one, and we will be taking a look at the other forms of such questions later, but still you can mark this particular question also as an important. So question number 4 and question number 3, so you can write it down, question number 3 and 4 as important. And then question number 6 is also a very important question, which talks about how would you deal with the following in the annual accounts of a company for the year ended 31st March 2013. So the company has to pay delayed cotton clearing charges over and above the negotiated price for asking delayed delivery of cotton from the supplier's godown. So because the company has delayed the delivery of cotton from the supplier's go down. So therefore the company will have to pay delayed cotton clearing charges, and those cost clearing charges would be over and above the negotiated price which has been earlier agreed upon. So up to 2011 and 12, the company has regularly included such charges in the valuation of closing stock. So this being in the nature of interest, the company has decided to exclude it from the closing stock valuation for the year 2012 and 2013, which will thus result into decrease in profit by rupees 7.60 lakhs. So this is how, now these are the facts of the case, and now we have to determine whether this is the correct valuation as per AS2 or not. So coming to the solution, so starting with solution to question number 6. And here in this particular question, the scenario is that there is a company which has delayed the delivery of cotton, and due to which such cotton has been picked up late from the supplier's go down, and because it was picked up late, so the business has to pay additional cotton clearing charges, which is in the, so additional cotton clearing charges, or the nature of such additional cotton clearing charges is interest that has been paid, interest paid in addition to the negotiated price, in addition to the negotiated price. So the cost that has been agreed upon on which the cotton has been purchased from that particular supplier, in addition to that cost, such interest has also been paid to that particular supplier because there was a delay from the end of the business owner in picking up such cotton from the supplier's go down. So because such the nature of the product or nature of the expense is of interest, and as we all know in AS2 and specifically in para 12 of AS2, we have the provisions as to costs which are excluded from valuation, of inventories, and with valuation of inventories as per AS2. Right, or as per para 12 of AS2. So this provision you can, or this para 12 of AS2, you can just remember that such para 12 belongs to the cost which will be excluded from the cost of inventory while we are valuing such inventories as per accounting standard 2. And in those costs, so there are costs that like abnormal costs or interest cost or any charges which are not directly related to the to the stock valuation would be excluded from such inventory valuation. So as it is mentioned in the question, that because this was of the nature of interest being paid to the supplier due to the delay in delivery of such cotton or delay in picking up such cotton from the supplier's go down, so such interest charges should not be included in the valuation of inventory. So what did the company decide to do? The company decided that the company has regularly included such charges, so therefore and up to 2011 and 12, so basically the valuation of stock up to 2011 and 12 is not in conformity with accounting standard 2. And after that, what the company has decided that so this being in the nature, the company has decided to exclude such costs, which would be the correct valuation as per AS2, correct valuation of closing stock as per AS2, as such cost should be excluded, or such clearing charges should not be a part of valuation while valuing the closing stock. So therefore, the company will exclude it from the closing stock for the year 2012 and 13, which would thus result into decline in the profit or decrease in the profit by rupees 7.60 lakhs. So this will again be shown as a change in the accounting policy, as up till now or up till the end of 2011 and 12 the company was including the cotton clearing charges. However, after realizing that this particular treatment of valuation is not correct and is not in conformity with AS2, so from year 2012 and 13 such interest costs or such cotton clearing charges will be excluded. Such cotton clearing charges shall be excluded from the closing stock and therefore the decrease in profit by rupees 7.60 lakhs. So this effect would be given in the year 2012 and 13, However, the company made correction in the books of accounts from the year 2011 and 12. So this particular effect or change shall be regarded as also change in accounting policy, and thus it should also be stated in the accounting in the notes to accounts, and so this particular explanation should be given in the notes to so this is a change in accounting policy and thus shall be disclosed in notes to accounts of the financial statements for the year 2012 and 13. So why are we calling it as a change in accounting policy? Because the accounting treatment that has been done in the previous year, that is in 2011 and 12, that has in order to correct that particular treatment of valuation, or in order to correct that valuation of closing stock in the books of account, we have given a comprehensive effect or a cumulative effect and thus decrease the profit of by rupees 7.60 lakhs. And in order to make this explanation or specify the reason for such decrease, we will have to disclose such change and show it as a change in accounting policy in the books of accounts, and thus disclose the entire working in the notes to accounts and of the financial statement for the year 2012 and 13. So looking at the question, it seems simple, but in while explaining your answer, you have to specify all these treatments. So we have completed 6 questions from the topic AS2 inventories, and the remaining questions we will be continuing in the next lecture. So till then, you can also take a look at the remaining questions and try to solve them on your own. However, we will be solving each of them in the next lecture. And by then, please revise the concepts once again and also try to solve the questions that we have done in the class by your own self. So take care and bye-bye. See you all in the next lecture.